channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Nikola Corporation, traded at NASDAQ, ticker name NKLA. Well, Nikola is a company that was going really viral at the beginning of the year in May-June action. As you can see here, it made all the way from about 10 to this really huge, almost 95. And then we see this very strong descending with the tops, let's say the top lines being like let's say the top resist, you can call it, or the higher heights being formed like this, actually classically from the level by end of June, beginning of July. And we see that the stock declined tremendously, actually from the level of 95, we're now 1283. And the question is, what's next? Because if you look here, we have the series of these waves going up and down. And in general, of course, if you are mid or long-term trader, I would say it's just wait. But if you're a daily trader, there is a setup now taking place that might be very interesting to enter for a quick but very strong rebounds play, because you see that these waves that you observe each time, they could lead to very nice profits. So how to trade here, therefore? First of all, that we see is indeed that we have this descending line, let's name it R1, that is taking place here, and this line was there forming quite strongly already from July, as you can see. But also what is important, and it might sound simplistic, but it is actually a negative bounce decline, meaning that the price declines but always returns to a certain trend line. In this case it's R1. It means that the price might return there. So R1 works as a very strong attractor here. And if you will ask yourself, when is the trigger point, when is it taking place, when is the next cycle is about to finish, you can clearly see there are some indications about this. And here indication is of course the moving average, because it's a little bit a slower move than the actual price. So you can see those let's say averaged actions taking place. Also, of course, you need to look at the volume. So note here that every time when moving average, especially moving average 20, by the way, we have three moving averages here depicted. Here you can see these are moving average 20, 50 and 200. So every time when moving average actually is about to bend upwards, the price is really setting up. You can see, for example, the action that was taking place by August. The same is true by the action taking place in November. And the same is true by the action that took place by actually beginning of the year by January. So each time moving average 20 is about to rebound. It's a known thing, of course. It's ABCD of trading in general on the descending trend line, and the price is below and price is about to pierce from the upwards from the bottom. You see these actions. So it's like 1-2 strategy, meaning that price is lower than moving average 20, it starts to pierce up, and moving average 20 starts to bend upwards. So you will have another wave and increase. The same here. The price is lower than moving average 20, it returns to moving average 20, moving average 20 is slowly descending, then moving average 20 starts to bend, another jump. And again the same, moving price is lower, it goes higher, then small descending, and then jump. So only thing is that this descending, this descending step before the final jump could be a bit broader if you look in action of October, November, or it could be a bit smaller if you look in the action of August, September, or let's say January, February. So we just need to be prepared for this. And what you see now, if you look carefully at the current price action, moving average 20, and this is the reason I'm showing this on the bigger scale, 1 year scale, because usually we use half a year scale with 1 day candles. It's a year scale with daily candles. You see that moving average 20 is about to bend upwards. So we are close to this, and also the price is actually starting to decline further, and you see tries to goes. Now it's sitting at this level that was formed really far in May, but it might also go to lower levels here, and this will be probably the stopper. So this channel will be the stopper of the decline of the price, and actually it might work for us as a very, very interesting entry opportunity here, because let's name these actually S1. So this will be the channel S1, and then the lower one will be then S2. So these channels are very nice to enter for this very strong rebounds that might take any moment and return, or let's say, to the attractor R1. So this is purely a attractor game here. So we just need to enter. And with this being said, this actually forms for us an entry opportunity. Here, let's rewrite it here in numbers, of course. So for those who would like to see it in numbers, this would be between, let's say, 1190 for us all the way to 1283. So this will be the first opportunity to enter. So anything below the current price action, you just need gradually to start buy, because we are about to fastly jump, and it's just a fake decline that is taking place here, similar to the action that was taking place by the end of December. Every time you can see it, also in end of September, end of December, actually every time also the same was taking place by end of July. But the thing is that this final decline before the jump could be also very deep, so we need to be prepared for this. And since there are no extra support levels seen here, almost more than a year, pure mathematical rule starts to play. This is purely will be the mathematical rule. So you will start average down. If you like this, let's say, strategy, you might start average down every time at every next, let's say, 10 to 15% about here. So with this being said, the next way to average down, the next point to average down will be here between 1030 to 1070. If we really go that low, although not expected. And then, of course, if you would like to average down again, we really need to take it a bit deeper, and again taking another, let's say, 10-15% approach of decline, which will make for us a next entry opportunity. This is purely mathematical rebounds play, very rare usually, because it's not that you can have this very often. Usually you have a history of support resist levels, but this is just really descending. So the next one will be, according to our calculations, between 930, 965. And with this, the rebounds should take place. And still, because this is very descending, very risky, we are and a very strong, let's say, descending channel here. If you look, we still might go a bit lower, but need to be really ready to buy and rebounds. And once rebounds will be taking place, of course, the very first, let's say, attractor here will be moving average 20 itself, as we also saw it previously, where the volatility might start and the first resistivity will be observed. But in general, the price might go all the way till R1, and actually the next first, let's say, price target will be about 1988, being this very strong resist line. So there are two resist levels where we could observe the resistivity. So let's write them, let's say, resist 1, which will be about 15 here, 1500, and resist 2, which is more, let's say, for those who would like to play a little bit longer here, it will be about 1988. So with these two resistors as targets, you could actually make a quite interesting trade here, and this could be actually very profitable in that sense. And again, speaking of the profit, this is also what is important. Always at our channel we advise 10 to 15%, since this is quite fastly moving chart, so it will be then a bigger expectation, so it's 15 to 20% profit. But it's really advised whenever you have it, just take it, enjoy it. If you want really to re-enter again, do it, or check other opportunities. because there are many at our channel. You can always find something where you can be very profitable. You can re-enter, especially even videos uploaded up to 5 weeks ago, especially speaking of the lower levels of entry, you could be just in time to make your profit there as well. So with this being said, that's actually the way to trade here. Of other parameters that are very interesting, and as I also mentioned at the beginning of this video, another indicator of this rebounds coming is the volume increase, and you indeed see gradually increasing volume here the last few trading sessions, because people are also aware of this as a classical behavior, starting entering as well, so you could be just right in time. Speaking of MACD, it's still undecisive. The histogram is quite flat here, so you cannot make any conclusions, but RSI is also going lower to oversold area, which will be also actually a rebound, because the first one was there by the touch of oversold area was somewhere about 7-8 of March, then rebounds. Now we could go deeper a little bit, also forming these levels, and then we could rebound. Still, as I said, it's a little bit unusual because the levels are based on mathematical expectation rather than actual support levels, except of the first channel, because there are no clear support levels up to 1 year, which is normal. The price action at the beginning of the year was really viral, and now when we see that expectation was not there, it's just coming where it was. But this is also very interesting because it's coming where it was 1 year ago, which will be also very strong psychological setup. So most probable play will be in the first channel, but we can also expect let's say going a bit lower. And still, because this is a little bit more risky approach, let's say more risky trade, instead of a classical 5 portions play, here it is advised to do 6 portions play. So what does it mean? It means that the money you would like to play here, you can split in 6 portions, and then you can buy with 1 portion in the first channel. You can then average down with 2 portions in the second channel if needed, and then you can average down with 3 portions in the third channel if we'll be going there. And the channels are actually here depicted with these, let's say, circles, so we can just write inside of those the same. So this will be then 1. Then we will have also 2 here, and we will have 3 in the, let's say, in the third circle. So this will be the best way to mitigate your risks versus profits, because here it's more about risk mitigation but also profit taking. And again, I mentioned profit taking is advised to 15-20%. Don't be too greedy, because you can see there is huge volatilities. There are huge volatilities seen for this stock, and still it's declining. R1 is just working as an attractor. So once you are further from it, and here we are almost 50% lower than this attractor, so it's in general good time to buy and just sit and wait, because also, as I said, moving average 20 is about to bend. By the way, as you noted, especially for those who are subscribed to our channel, this is a new format, little bit in graphics. It's a little bit, let's say, more fixed graphs versus the handwriting that was in previous videos. I'm really curious to see and read in comments, learn how you like this one, or maybe you like more the previous style. If so, we will return to previous style. Please let us know, and we will try to improve further our graphical representation on the stocks analysis. So with this being said, good luck with Nikola, and see you at another episodes of Stocks Advisor channel.